Welcome to TheoTrade. This is Don Kaufman. It's September 25th, 2019, and you are watching the TheoTrade evening video. There's about 4 minutes left inside today's cash market session with the S&Ps bouncing back to the upside about 18. The Nasdaq also taken off to the upside by the tune of about 1.2%. But I got to tell you, it's not the bounce back that has caught my attention. It is absolutely unequivocally what we term outsized moves, and I'm going to show you that here momentarily. There are a number of just really key players. I'm just going to show you a few of them, but a number of key players that are making moves that are statistically significant. And again, not only are we going to display those, but what that may mean for you in the days to come. First of all, let's start with the S&Ps and this bounce back. You know, you'll see a line kind of right across your screen that's at 2983. That is an area of interest to us currently as the possibility of what we term a gravity point. Now, for those of you that are a little bit newer here, you've actually not heard that term, maybe gravity point. Those are specific levels that we have actually pulled out of the marketplace unto which there is a tremendous amount of risk, and that the marketplace literally gravitates to those particular levels, because you can think of them, for those of you that speak a little bit of geek here, as what we term delta neutral spots in the marketplace. Again, they are kind of concentric areas of risk. It does appear that 2983 very well may be the beginnings and the makings, if you will, of one of these gravity points. You can see, of course, we stopped dead cold at 2983 earlier in today's trading session. We saw a big volume burst coming into it. Again, volume burst on the way out of 2983. It has many of the hallmarks, if you will, of one of our gravity points. Of course, to kind of firm that up, we'd rather see the marketplace trading back to 2983, either by today's close, which is just a few minutes away, or a little bit here in the after hours. I wouldn't be surprised at all to see the marketplace, though, come right back into the 2983 handle. But as I was saying, it's not this kind of rally back. You know, you see today's rally and you think, oh man, this is a wicked move to the upside. But net, let's take a quick glance at the SPX. We've been through 3 trading days. What have we here? Well, what we really have is effectively a marketplace that, again, started the week right here. And again, I want to zoom this so you can kind of see it. What you're looking at is the expected move. It's a weekly expected move. This is what the options market kind of depicts risk to be. I'm going to be talking about that extensively here momentarily. Again, this central line is right where we started the week. And right now, it's, of course, where we're currently at. We actually threatened the downside of the expected move. We almost hit all the way down to 29.43, which is the lower end of that expected move. Now, let's push this aside for a second. Again, we're looking for a $47 expected move on the week. And right now, what do we got? I mean, roughly speaking, nothing. Again, where the week started, where we're currently at, is massively unchanged. Now, I made kind of a bold statement a moment ago when talking about what term like outside moves. And I just want to stress this right now. These large moves, okay, in a couple of products, and we're going to show you Google, we're going to show you Microsoft, we'll show you Walmart, and Netflix, and Facebook, and the bonds, and even the emerging markets, okay, they demonstrate that there's an underlying theme of broader market instability, and it's some of the reasons that we think that some of the volatility products, specifically like VVIX, are not per se backing down. Let me show you what we mean by these outsized moves and statistically significant moves. All right, let's actually bring Google up to the plate. And what I'm going to do is I'm going to apply what we term auto expected moves. Now, what an auto expected move is doing, okay, it's looking at the option chain. There's the closing bell. It's looking at the option chain and kind of reverting back throughout the course of the week in terms of what did Google's options market depict risk to be, okay, throughout the course of the week. And then it literally draws like, all right, the option market said we could probably trade up to about 1250, okay, or down as low as about 1209. And that's, again, it's just derived from options pricing. And again, if you're specifically curious as to what options pricing, you can come in here to think back. Okay, think back is just end of day, back testing. And it's pretty much derived from kind of the weekend volatility in here. So you can kind of go back and you can say, all right, what did the options market in Google to pick risk to be, all right, in the next, for instance, 5 days? And it was looking like, okay, over this weekend, here we are trading right around 1240. It was supposed to be, 20 some odd dollar move. Okay, and that's exactly what is marked on your screen right here. Now, the actual moves that are occurring in here, just downright phenomenal. I mean, do you realize that in something like Google, okay, you could have turned around and purchased a straddle in here for what? For 20 bucks? Look at the size of the move that you're getting here, right? And I want to stress this because I talk, okay, sometimes incessantly about being an option premium buyer. I know that there's people that are in the trading community that are like, always sell options. No matter what, you should sell options. But I'm telling you right now, you're getting, okay, these wild moves that, I mean, again, this is just a perfect example. This is one trading session. And today, Google has roughly moved, what? Almost 30 bucks. But if you had actually purchased a straddle in here, and I'm not in any way, shape, or form saying you should go out and buy the straddle in Google, but the straddle in Google earlier this week, I mean, the whole thing was trading for what? 20, maybe $21. All right. And that was, again, that was kind of the weekend quote. On Monday morning, you could have bought it for a lot less than that. Right. And you look at this and you're like, wow. Okay. We literally are tagging the edges of the expected move and ripping off of them. Now, that's Google. If it was just Google, I would push it aside. But then you start looking at something like Microsoft. Now let's zoom in on Microsoft. It's almost identical in respect to how vicious some of the moves have been. We can even bring up like Walmart. And the reason I threw Walmart in this list, I mean, people, this is a low beta, low risk kind of product. What's it doing? Smashing through some of the expected moves. And the irony of this is, okay, you had massive tech stocks like Google, okay, bouncing off the lower edge of the expected move. Again, it's the lower edge of the expected move. Meanwhile, and the reason I brought up Walmart is to show you contrast, okay, then you had consumer staples bouncing off the upside of the expected move and reverting back in. Okay, and you'll see Walmart finished almost completely unchanged. So the point that I'm trying to make over here, again, this is just demonstrating it's just broader market instability. These sector rotations, okay, are all over the place, and it's actually locking the S&Ps inside of a range. But I'm telling you, okay, this is dangerous kind of territory and doesn't last for a substantial period of time. So yeah, we went through Google and Microsoft and Walmart. Let's bring up Netflix. Now Netflix, okay, has been the poster child for getting smoked lately. Take a look at Netflix though. Last week obviously having a horrific week to the downside. Nevertheless, Netflix actually cracking through the lower end of the expected move and bouncing back inside of it to continue on over here. Now we get really serious. We start looking at bonds, okay? The bonds are having phenomenal moves, but they too are adhering to the upper edge of the expected move. Now, before I go on to the emerging markets, because again, we could spend all day looking at these wild and kind of, outsized moves. And if you look at the emerging markets, they hit the edge of the expected move to the downside and bounced off of it. All this stuff is statistically significant and can traded on, right? But I want to come back over to the bond product because there's just been so many questions about bonds in general. So let's spend the last few minutes over here, okay, discussing the bonds. Again, my overall feeling on the marketplace, you may see a marketplace that looks right now unchanged on the week. I look at it vastly differently. The correlations are all over the place. If you take a look at like the S&P 100, you realize you have a day where the S&Ps were up just a few minutes ago. They were up what? 18, 19 points. The advanced decline line is a veritable slop fest, right? This should be more like, 80-20. we're 63.36. If this marketplace correlates, and it will, correlates means, 90 stocks trade higher or 90 stocks trade lower, you are going to see some wild movement. These rotations are going to come to an end, and the entire marketplace is very likely to make these quote-unquote outsized moves. Now, one of the things that's a little bit worrisome is those moves, okay, are right here inside of the bond market. And one of the questions I keep getting on the bond market is a very simple one, okay? People keep asking me, how come the bonds don't just keep trading up? Well, why should they trade up? I said, because, Don, the Fed is continually going to lower interest rates. Yeah, but the Fed, they're messing with Fed fund futures, which is really short duration paper. Like it's the repo market, it's the overnight market, right? The Fed right now is not, in the midst of a twist program, or what we term quantitative easing, which is where they would influence something like bond markets. The bond is the 30-year bond. Now, the Fed has gone out in years past and literally influenced this market. They've bought bonds to try to drive rates lower, okay? But when it comes down to it right now, and you look at bonds, forget anything about interest rates. It does not matter, okay? Here's the bottom line of the bond market. You have banks, you have traders, you have hedge funds, you have proprietary trading firms, and people, they are sitting on massive gains because they're buying bonds not for the interest rate associated with them. They're buying bonds, okay, because the bonds are simply going up. And that's making their accounts go up. And what you have right now, okay, is really dicey. We could have a situation where, hey, listen, traders start to take degrees of profits in those bonds. I'm not saying that the bonds can't continue to the upside. However, I am saying this, okay? The marketplace could see a wild sell-off inside of the bond market. Why? Profit taking. You don't want to be necessarily the first trader out the door, but you can't be the last trader out the door. And that traders are sitting on phenomenal profitability on a year-to-date basis. I mean, go look at the TLT and snap this to a year-to-date basis, okay? A lot of traders, they just saw themselves up 20% plus in the TLT. They saw themselves now only up about 15, 16%, okay, in terms of the bond market. Why not sell the marketplace? And you're thinking to yourself, why would they, again, want to sell? Forget about interest rates. They sell, okay, to book the profitability. And it is very, very dicey right now. Look at some of these moves inside of the bond market. Again, especially when you start to look at the auto expected moves, almost every recent week, we're cracking outside of what the options market said we would, which means that volatility inside of the bond product is cheap on a relative basis. Listen, all of this amounts to one thing. Again, you see the S&Ps, and you see them trading in an extraordinarily tight range the last couple of weeks of trade. This is likely to come to a very ugly halt in just the next few trading sessions. Ready for some more volatility. Again, these outsized moves, this is one of the marquees, again, in sector rotations before we actually see some more volatility to the overall marketplace. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.